Welcome back to the Flex Free Game channel, your go-to spot for free game, real strategies, and market insights you need to stay ahead. So let's go ahead and get into it. Hey, welcome back to the channel, everyone. Today we're going to be breaking down this week in the stock market. So we're going to be looking at all the big stories. We're going to take a look at all the major market movers and what investors are watching heading into next week. So make sure you stick around to the end because I do want to share what we should be keeping an eye on and make sure that we're prepared for the days ahead. So this week was all about inflation, interest rates, and tariffs. So inflation came right in line with expectations, around 2.7 year over year. That helped ease fears of runaway prices and gave markets a little bit of breathing room. Still, Treasury yields ticked higher, which pressured big tech and growth stocks. Investors are still betting on Fed rate cuts later this year, but odds of those cuts happening sooner rather than later have faded a little bit. Meanwhile, the S&P ended the week slightly lower, the NASDAQ underperformed, and the Dow finished about flat. AI and tech remained in the spotlight. So one of the biggest headlines this week was NVIDIA's reported $100 billion investment into OpenAI data centers. That sparked a rally earlier in the week across all AI-related stocks, from semiconductors to cloud names. Oracle also made waves with AI-related announcements, but by midweek, profit-taking set in. Analysts are warning of a potential AI hangover as valuations in the space are running hot. Another big topic this week was tariffs and trade policies. So another big theme, new tariffs from Trump administration. These include 100% tariff on branded drugs not made in the U.S. We have a 50% on furniture and a 25% on heavy-duty trucks. While not a total market shock, these moves have implications for pharma, autos, and retail sectors, and investors are now building that uncertainty into their outlook. Finally, on the economic front, GDP for the second quarter has revised higher, and personal income and spending both beat expectations. That shows consumers are still hanging in there, but inflation remains a wild card. Now let's take a look at some of the biggest movers of the week, both positive and negative. So we'll take a look at some of the biggest winners as well as the biggest losers. On the winner side, number one, we have Metsera, soared more than 60% after Pfizer announced an acquisition deal. So that was a big move. Anywhere Real Estate jumped over 40% thanks to a confirmed buyout from Compass. EA, or Electronic Arts video game creator, surged about 15% on reports that it could go private. Global Foundries rallied more than 8% as the U.S. pushes to cut reliance on foreign chips. And of course, NVIDIA and other AI names got a boost early in the week before cooling off. Now for the losers, we have Concentrix, fell about 13% after missing earnings and lowering guidance. Kenvue dropped about 70.5% after reports linking Tylenol use in pregnancy and autism sparked investor concerns. Costco slipped nearly 3% despite solid profits as same-store sales growth came in weaker than expected. And late in the week, Oracle and AI stocks pulled back after their earlier surge. So what's next for investors? All eyes are going to continue to be on the Fed. The next inflation and PCE data will be key in determining how quickly rate cuts could come. Earnings season is also around the corner with tech and consumer companies in focus. So that's a big thing to kind of watch out for. Markets will also be watching tariff headlines and any escalation in trade policy. So we know from the past that anytime there's new tariffs or anything that comes into the market, we've seen that impact. So keep an eye out for that. And finally, analysts are asking whether we'll see broader market participation beyond just mega cap tech. And if AI growth stocks cool, could we see money rotate into industrials, healthcare, or financial? So those are some things to look out for as we go into the upcoming weeks in the market. So here are a few things that you can do to take advantage of the market right now. So volatility always means opportunity. So one of the trades we like to do in these situations is called volatility trading. So we want to take advantage of strong upward movement. With this trade, basically, we're looking for companies that are having a 1% update on the day. We're going to be looking at those stocks around the last 15 minutes to get in. We want to hold these shares overnight, right? So we're going to be holding them overnight and waiting for that volatility of the next morning to go ahead and strike. The nice thing is if the stock is in a 1% up day and it holds through the end of the day, we know the institutional money staying in that stock overnight, so we could see a nice jump in the next day. And we want to make sure it's a quality company. We take a look at the Dow, S&P 500 for quality companies that have great revenue and also are showing really nice charts in the short term, midterm, and long term. And that's the trade you can do to take advantage of volatility. Next thing is we can always do cover calls. So if you're in shares that have been hitting or kind of pulled back a little bit, if you have at least 100 shares, you can sell calls into the market and take in cash premiums. It's a great way to generate income if you don't have shares and you want to start buying shares and selling cover calls. Or if you already own the shares, you can sell those cover calls to generate income on those shares as well. Also, if you're volatility trading in increments of 100, it doesn't go your way, you can fall back on cover calls. And then the last thing I think is always looking for opportunities for long-term investments. So if any of the companies that you are holding long-term, you really have a strong outlook on them going forward. If you want to look at this time, if they've pulled back a little bit as a time to go ahead and add to your position. We like to use some of the moving averages as buying as entry points. I really like when it bounces off that 200 or if it's coming back across the 200 going to the positive. That's showing that the stock is going more back in favor, and it's a great time to get things that are on sale. Again, you want to be looking at quality companies, things that you have a really strong outlook going forward. All right, so that's going to be the market recap for the week. We went over a lot of great things here. If you found this helpful, go ahead and hit that like and subscribe button. Also hit that bell notification so you see any of our new videos coming up. Also, if you have any questions, please feel free to put those in the comments. We'd love to hear from you. Also, if you have some topics you want to hear from us on in the future, let us know that. If you are looking for coaching, go ahead and type Flex in the comments. We'll send you over a link on how you can get set up and get started with that. If you're looking to start generating income with cover calls, we do have a great Udemy course. All you have to do is type income in the comments down below. We'll send you over a link for that. And lastly, if you're just looking to stay up on the market on a weekly basis, type free in the comments below. We'll send you over our free weekly newsletter. And that'll wrap it up for today. We'll see you on the next one. Have a good one.